So let's say you go to buy a house, the seller offers you $20,000 as a seller concession to pay for closing costs, or they say, hey, we can reduce the price, or we can give this to you as a seller concession. What do you do? Well, it might be better to take that as a seller concession so you can pay all your closing costs and also reduce your rate, because reducing your rate is actually more benefit to you than a lower purchase price in most cases, and here's why. We did the math on this, and it turns out a 1% reduction in your interest rate lowers your principal and interest payment by about 10%. So instead of a $2,000 a month principal and interest payment, that might be knocked down by $200 down to $1,800 a month, which could really free up your budget. So how much can a 1% lower rate save you? Well, it's actually pretty significant. We assumed a 7% starting rate and 5% down. So on a $400,000 house, you're going to save about $250 a month by lowering your rate by 1%. And the bigger the loan amount or the bigger the home price, the more you save. So on $1 million house, you're saving over $600 a month by dropping your rate by 1%. But even on the lower end of the range, if you're down here in the $250,000 or $300,000 range, you're still saving between $150 and $200 a month by lowering your rate by 1%. But you don't have to lower your rate a whole 1% to save money. Even by shopping around different lenders, you could probably lower your rate by a quarter, and that could save you $25, $50 a month, which could be significant as a new homeowner. So going back to the original question, should you accept a lower price from the seller or seller concessions? Well, let's take a look at something else. You get a lot more bang for your buck by asking for the seller concessions, because if you can ask for enough to buy down your rate by 1%, let's say on a $400,000 home, that's the equivalent of lowering the purchase price by $40,000 almost. Let's say the seller offers you $15,000 and you confirm with your lender that that could reduce your rate by 1%. Just as an example, you'd have to lower the purchase price by nearly $40,000 to get the same monthly payment. So you're getting so much more bang for your buck by using any seller concessions for a rate buy down rather than a reduced price. Now, there are some cases where you want to take the reduced price instead, like let's say you wanted to pay off that loan soon, you plan to refinance after a while, then it might not make sense to pay points, but still, you have to consider, if you're just looking at it from a monthly payment standpoint, using those seller concessions to buy down your rate is going to go a lot further.